And AppZone has built digital products for 12 of the large Nigerian banks and 400 microfinance banks in 7 African countries that allow them to do everything from encryption, digital banking, lending automation, clearing. So really thinking about how can an African bank or microfinance bank better serve the customer by cutting costs on technology that they need. Also a platform, also took a decade to get to this place where it's ready to scale. And also a very tenacious but visionary founder willing to build a platform.
GFA-Attract is a program that teaches entrepreneurs about the venture capital world, how to raise capital, and actually talking to venture capitalists from around the world on the opportunities that they have and the things that they can learn. Today, we have the privilege and honor of talking to one of Africa's very, very active venture capitalists. Today, we're going to talk with Rob Eloff. Rob is a managing partner at Lateral Capital. And Lateral Capital is a mission-driven venture fund investing in early-stage opportunities in Sub-Saharan Africa to bridge the gap between capital and opportunity. Lateral Capital invests in businesses delivering foundational technology across financial services, healthcare, education, and clean technology sectors. Lateral has 13 investments and secured the backing of leading family offices in the US, Europe, and Africa. Prior to co-founding Lateral Capital, Rob was a venture partner with Conversion Capital LLC, a New York-based fintech VC fund. He previously founded Frontier Dawn Partners, an evergreen vehicle for capital deployment to early-stage companies in Sub-Saharan Africa. Frontier Dawn's portfolio was combined with Emergo Cap Partners to form Lateral Capital. Rob started his career in capital markets at JP Morgan, Johannesburg, before joining Goldman Sachs, where he was an executive director based in London and also in Moscow. He transitioned to M&A as a director at London-based ACI, and he has advised and invested in Sub-Saharan Africa, Eastern Europe, and Latin America. Rob holds a master's degree in finance from Cambridge University and a bachelor's degree in philosophy and economics from the University of Cape Town. We are very, very pleased today to welcome Rob Eloff. Hello, Rob.
Debo, thanks very much. It's a pleasure to be with you.
It's great to see you. First of all, I would love to ask, where are you today, actually? Where are you speaking to us from?
Yeah, you're seeing a little bit of sunrise behind me still. I'm calling from California, where I'm based, in Los Angeles. So the other side of the world to you, pretty much exactly on the opposite.
Exactly. How is the weather like, actually? It looks like a beautiful day.
Yeah, it's hot, but I won't complain. It's hotter, than many places, but not as humid as Lagos, for example, where I spent a lot of time pre-COVID. But yeah, great. Thanks for asking.
Excellent. Rob, I mean, I generally like to start the program by getting to know a little bit about you, entrepreneurs to actually get to know more about you. So I guess the question is, could you do a quick introduction? Well, I wouldn't say quick, but could you do an introduction about Rob Eloff?
Sure. I will make it quick, Debo. Yeah, so I was born and grew up in South Africa around the time of the transition to the new South Africa. I was fortunate enough to live through that moment in history as a young boy, and grew up in Johannesburg, went to school on the east coast of South Africa in KwaZulu-Natal, and grew up at what turns out to have been a transformational time. I do remember probably being a little bit of a young brat, getting impatient with the amount of time standing online for the first elections in SA in '94 with my mother, who was rolling her eyes at me complaining about standing in the sun for, a couple of hours. And her words of wisdom to me were, you won't appreciate this moment now, but you'll remember it for the rest of your life, and you'll take it with you. So stop complaining. And it did, and so I went on to study in South Africa, and after my undergraduate studies, needed to become, somewhat of a breadwinner. And at the time, working on a trading desk on Wall Street was all the rage. And, so I did that for a while. And that led on a journey that took me out of SA, and very focused on emerging countries globally. And I'll round it out by saying, my whole life I've been interested in this notion of emerging countries. The word we used to be told a lot was convergence. When will they catch up? And I was always very fascinated by this concept of catching up, and realizing that in some ways we maybe were catching up, but in other ways we had the opportunity to be ahead, is what fascinated me through my career. So, I lived in London, working for investment banks, transitioned to living in Moscow for a number of years, which is another large emerging country with a lot of differences and maybe some similarities, and then really turned my focus back to Africa, with private equity and M&A, focused on banks in Africa, and spent a lot of time in markets like Zambia and Ghana, understanding the financial services sector. But it was the need to come back to just focus on Africa that made me stop everything else that I was doing and think about what the right way was to do that. We can go into the models of investing in Africa with your permission, because I don't want to take you into the weeds, but I had a lot of questions about private equity and venture capital and whether it was right for Africa.
This is interesting, and I'm going to take you up on this particular point on private equity and the right model for investing. But you mentioned a few things that I really would like to unpack, right? Especially in your personal story. There's this quote from Chinua Achebe, a famous African writer, that says that Africans need to tell their stories, and unless the lion hires his own storyteller, the hunt will always favor the hunter. And it's interesting. You mentioned, going on a line and waiting to vote for an election, and how your mom said to you then you wouldn't appreciate this until much later. What do you think about her words then?
Yeah, what was so important about what she said was, as a 10, 11-year-old kid standing online in South Africa as a white male, that absolutely, had been given an unfair head start in life. I was standing online, and I think maybe it was the very early sort of realization of how much ignored potential there was, right? And I think probably a little bit of a cliched quote that a lot of people, talk about, but I truly believe is this notion of talent is evenly distributed, but opportunity is not.
Correct, yes.
I think it was the foundation stones of that staying with me, that was relevant from that moment, where how crazy is it that only at the age of 10 or 11 you realize who your countrymen and women are truly, and how much potential there is that is not being harnessed. I think that is what I've reflected on over the years, going back to that moment, and there is still so much work to be done. And the core principle for me is that is the North Star. Do not ignore our potential.
You talked about having a kind of like indirect head start because, as you said, you were, using your own words, you were a white boy in South Africa, and basically you had a head start. So tell us about how that worked, because you talked about using that head start to leave South Africa, you went to the UK, you went to Moscow. Tell us a little bit about that.
You know what's so crazy, Debo, and I'll just touch on a little bit more. But what I really saw from that sort of privileged white kid in South African perspective was, in the first grade, out of 32 kids, I think I had 2 African kids in my class. And by the time I got to high school, that was more like a third. And by the time I got to university, it was more like a half. Still in a country where it should be 90%, but I lived that change. And I got to see that, and I got to go to university with people that were the first in their family ever to go to university. That's something that I think stays with you for a very long time. But to your question regarding the head start, I think this really applies to founders as well, because so much of success in Africa is being given the opportunity to tell your story, right? And to interact with decision makers. And that is not a level playing field by any means. But I got to London and I met people from Brazil and people from Russia and people from all over Africa, even more so than I had in SA. I think the head start that you mentioned is just the exposure to that global, diversity that I was so fortunate to get, working in an organization like a US investment bank. That, again, there are good and bad things about that, but one thing that you cannot argue with is the environment of interacting with that talent globally is very powerful.
Thank you so much for that, Rob. Sorry, but you've mentioned several things that have hit me, and now I'm almost like, where should I even start asking the questions? There's so much I want to know. But I guess maybe I'll, because you've hinted at this, I'll probably start with, talent, success. You said a few things that, talent is, that there's a lot of talent. You see that across Africa, but opportunity is not. And sometimes this opportunity is also a function of some aspect of diversity. What would you say, and forgive me that this is just an opinion I'm asking, what would you say would be required to have that level of diversity in some of the African cities or countries, for example?
Yeah, I think the beginning is also just about understanding the rules of the game and the expectations, and then being able to translate them to local environments. And I'm excited when the time is right to talk about some of the founders that we work with. But I've seen, and a lot of the work that we do is around taking what just seems like the way to achieve a successful venture in Silicon Valley or in London, and really unpacking it and really questioning whether it's the same or not in Lagos or Nairobi or Cairo. But I think in terms of the diversity for success, I think we should start from the point that as human beings, we are all biased in some way. Everyone has biases. And as a species, we love to put things into neat boxes and categories.
Yeah.
It's how we operate in some ways. And I think one of the things that my business partner, Stephen, and the rest of the team have really helped me see is that we need to get out of our own way with those blind spots that we've created to be successful. And to do that, you need a team around you that covers those blind spots and definitely has their own blind spots. But this is the greatest part of, the early success that we've experienced so far with Lateral is, the joke about us is, a white South African, a Jewish guy from New York, a Somali Kenyan, a Nigerian lady, and a couple from Tunisia walked into a bar that's called Lateral Capital. And so I joke about it, but I think the real point for me, since I know for many people this is a sensitive topic, is diversity means getting rid of our blind spots to be able to be better. And we've seen the benefits of that in our own team, and we've seen the benefits of that in founding teams. That is the important thing.
Okay, I'm going to jump straight into Lateral Capital then. How did Lateral Capital, because you've talked about someone from Tunisia, someone from South Africa, someone from Sudan. So tell us, how was Lateral Capital formed? What's the story behind that?
Yeah, sure. So, I think it's important always to have an empirical basis and test things and be able to say you're right or wrong objectively. And the best way to do that is to put your own time or money at risk, preferably both if you can, and really measure your rightness or wrongness, because when you're right or wrong with your own capital and time, it hurts or feels victorious so much more when you really pay attention and learn. And so in, thinking about what's the right way to interact with this tremendous potential of technology in Sub-Saharan Africa, I had a lot of questions about, there's all this private equity capital that is chasing, I think, less than 1% of the opportunity set, because they were focused on companies with thresholds that just don't represent the opportunity in Africa. If 99% of companies are generating less than $10 million of revenue, and private equity only wants, companies that are $10 million of revenue or more, that seemed like an interesting problem to solve. At the same time, Silicon Valley VC saying a company should raise, an up round roughly every 18 months at 2x the prior round valuation. That's not how Africa looks either, because there's entrepreneurship by necessity and a core focus on profitability and growth. And so for me, it was about figuring out how to invest in that with my own capital. I did that for a while. I was an angel investor while I was in VC, and I was fortunate enough to meet my partner, Stephen, who'd walked a very similar path and was also putting his own time and capital at risk in a very real way. And so we found over time that we thought the same about what's foundational technology. And we were fortunate to have a couple of bigger investors say, wow, this angel investing thing is hard, and the continent is big and you need a team and you need to ask questions. Can we just do it alongside you? And so that is how Lateral was born. It was quite organic, but we set out with quite a bold mission to be able to be stage agnostic, invest debt and equity, and meet the market where it is, in terms of what we think founders might need. And it's been hard, I'll be honest with you, it's been really difficult, but it's been the most rewarding thing I've ever done, because I think we've built something that is appropriate for the potential of Africa.
Could you tell us a little bit about, maybe one or two of the companies that Lateral Capital has invested in recently that, you'd like to share or that we could actually learn from?
Oh, I could talk about this all day because that is my favorite topic. The founders that we're working with. There are two that I'd love to just shine some light on. And the reason why these two is because their path to being successful ventures does not look like what you read about, in Silicon Valley. Both of these companies took over a decade to really, I think, capitalize capital and achieve scale. Many iterations. So the first one is the most recent investment we made, which is a Lagos-based company called Seamless HR.
Seamless HR.
Yeah, and so Seamless, a lot of people think of it as the Workday of Nigeria, because they need that reference. In the US, Workday has been a successful company, but simply put, Seamless manages payroll and human capital in the private sector in Nigeria. Its customers include large banks, some large international consulting and accounting firms like E&Y. And what's so great about Countable and what we really love is the idea of building a digital platform to manage human capital, enable financial transactions to sit on top of that platform, and look at this data set of salaried paid employees and let the best fintech products rise to the top, because that's a really attractive base of customers, I think is so interesting. And so I think of this as a platform for human capital and fintech. The founder, Emmanuel Okeleji, is a trained medical doctor and like myself, recovering investment banker, who's been working on this problem with his co-founder, CTO, for 15 years. They've been working together, and what started as a jobs board and a classifieds for human capital evolved to become a payroll and human capital management system over that time, with incremental sort of product focus. So that's one, and I point to Seamless because human capital is the biggest challenge and opportunity of Sub-Saharan Africa, and digitizing and managing that, and then layering products and services on top of it, I think is very powerful and can also service the SME side of the economy. So that's one. If you'll humor me just for another 2 minutes, touch on the other company I wanted to, I'll do that, and then I'd be happy to.
Yeah, sure. Please go ahead, Rob.
AppZone is also a platform. A lot more people understand AppZone now conveniently because a company in the US called Encino went public a couple of months ago and is up 300%. And I can now just say AppZone is the Encino of Africa, and people get it a lot more quickly. But it is a digital operating system for banks, for African banks, built by 3 visionary founders based in Lagos as well, and a team of 150 engineers between Yaba and Lekki. And AppZone has built digital products for 12 of the large Nigerian banks and 400 microfinance banks in 7 African countries that allow them to do everything from encryption, digital banking, lending automation, clearing. So really thinking about how can an African bank or microfinance bank better serve the customer by cutting costs on technology that they need. Also a platform, also took a decade to get to this place where it's ready to scale. And also a very tenacious but visionary founder willing to build a platform.
You mentioned something earlier on about, how these companies have had to iterate, and then also the venture capital model for Africa and the challenges thereof. Based on what you've seen and based on what you've said, do you think venture capital is the right model for Africa, and what do you think it really should look like to support organizations like AppZone, for example?
Sure. So Debo, I think the 2 key things to iterate on here and to think about a little bit more is we were talking earlier about the fact that entrepreneurship isn't always a choice in Sub-Saharan Africa. In the big cities that we invest in, entrepreneurship is a way of life in many ways, and the need to build something that has unit economics that are attractive, and simply put, to be profitable, is also a necessity, right? Because typically, if you're a founder, venture capital in Africa has come a long way, and depending on whose numbers you use, maybe $2 million went into the market last year, and maybe that number was $250 million 6 years ago. But the point is, profitability still matters so much.
Yeah.
And so if you're a seed or early Series A stage company, the traditional venture model will be very heavily dilutive to you because you haven't focused on growth at all costs in Sub-Saharan. You don't have that luxury. You don't have the ability to raise $5-10 million every 18 months and just deal with all the friction and other challenges of building. So we've been experimenting and had some positive results with non-dilutive financing. So things like revenue-based lending or hybrid structures that are debt and equity to address the fact that there's earlier profitability. I think that's really interesting, and I think we'll see way more of that. And I think founders will realize that they have more options than just to take another, term sheet from traditional venture at the best valuation they can get. If they've achieved some product market fit and scale, they can choose to finance that another way, which might look more like debt or a hybrid instrument. And Africa is ready for this, I think.
Yeah. So you would say, and in your opinion, you would say that African startups should really focus a bit more on profitability as against more of like the growth at all cost model?
Well, I think they already do. I think there's, just getting to the next round requires that focus. I think the biggest challenge, honestly, with VC in Africa and building companies in Africa, especially at this time in history when a lot of people have been throwing around headlines like, Alibaba was born in 2002 during a pandemic in China, and what's going to come out of Africa. And I think what's short-sighted about that is the difficulties of entering a second market or navigating the friction of going from a market where mobile money is predominant to a market where, like Nigeria, where banks are still predominantly the rails for fintech, and being able to do both. That's the biggest challenge, right? And so scale is naturally difficult because we're talking about 54 different markets with different dynamics, and even more so than countries, cities, with large populations that are growing fast. So achieving scale is not simple. And so I think what I'm more excited about for founders is thinking about how to finance scale in maybe 3 African cities that look very different. If you're in Lagos, what is it going to take to be successful in Cairo as well, or Joburg as well? And how do you finance that thing? And yes, it's profitability, but it's also some out-of-the-box thinking.
Yeah. So it sounds like you like companies that are able to digitize value chains, so to say.
Well said. I think we think of it as platforms that provide a large part of the digital infrastructure layer, and are very mindful of legacy infrastructure, right? You can be a very innovative fintech company, but there is still a chief risk officer at a bank that is in charge of originating loans, and you may as well know how that works too. And if you can build it better, great. But if you can build it to make that process better, that's also great. So don't just disrupt for the sake of disrupting. Let's think about, what's legacy infrastructure and what platforms can go from A to C without having to go to B first.
That's actually very valid, because sometimes we hear entrepreneurs who just want to disrupt. So it's really key to even understand what is the basic present value chain, and then how can you actually make that better rather than just disrupting for disrupting's sake, right?
Yeah, I think, there's a counteraction for every action, and you've got to understand who you are disrupting and how you are disrupting them. And maybe they deserve to be disrupted and you can build something better, but it's also very feasible that they might be a great partner in what you're building. And so we see this especially in fintech, in Sub-Saharan Africa. I think African banks are a great customer to have. If you're building something, build it for them. They happen to be the second most profitable retail banking operation globally in spite of the risks. And so some things don't need to be rebuilt from scratch.
Interesting. That's a very, very interesting perspective. Very interesting. I would like to ask about Lateral. So you've mentioned some of the companies that you've invested in, but just to tell us a little bit, what size of checks do you normally write? What's your average investment in some of these startups?
Yeah, sure. So from a high level, currently we're a $21 million fund, and we're still, growing that with a target to get to $50 million. Yeah. And we look to make investments starting at $250,000 up to $1 million in equity per company. And we can then go up to $5 million if we include debt products on top of that to finance growth. So the idea is to be able to be a life cycle financing partner from seed through, much later, maybe Series B, get to $1 million of equity in the right shape and form, and then continue to finance growth with debt for successful companies there. We've done smaller than 250K. 250K is still today, even in a $2 billion VC for Africa world, something that moves the needle.
Yes, it does. How do you see And I know, so for Lateral Capital, my understanding is, you've had your first fund, and then what you mentioned now is the second fund. How do you see, what's the plan or your experience with regards exits and things like that? Or do you just hold and gain back based on profitability?
Sure, yeah. I think any VC has really two customers, founders and investors.
Yeah.
And you need to align what your two customers need. I would love to invest in a company forever and be evergreen. My investors don't need only that. They do need exits. And I also think, we shouldn't be dismissive of the fact that exits are fantastic and should always be worked towards. You can choose not to take that route, but always have the option. I was, a lot of my thinking came from an early exit that I had as an angel. And I think the path to exit for that angel investment is the same to the exit path for Africa generally, which is corporate strategic investors. The biggest surprise we have had, when we say it's 2020, what is way ahead of schedule, that is how much interest there is in buying growth from, Fortune 500, large European companies, and some of these are household brands. In the clean energy space, we've really enjoyed working with companies like Siemens and Total and Shell that are absolutely actively investing in growth and innovation and coming into ventures at a pretty early stage. So, my partner Stephen always says companies need to be sold, not bought. And you need to engage with those stakeholders very early on and understand what it is that they are trying to build or buy, and then solve for compatibility. I think that is where exits come from, and bringing that capital into your cap table early on and working with them to build something more valuable is how exits happen.
Very interesting. There's been a lot of research done about corporate venture capital firms and things like that. And many people say this is one of, having spoken to several VCs now, many say that this is actually one of the ways to get more LPs into Africa. Would you agree?
I think so, but I think that it can also be symbiotic to have, in our case, we were fortunate to have family offices first that typically had done entrepreneurial things. So they had built companies and they were up for that challenge. I think you do need to do the hard work of getting something that's investable and going somewhere before you bring in corporate venture capital. Yes, there are accelerators, especially out of your, the part of the world that you're in currently in Asia, that are willing to be involved very, very early. At seed stage, there is sort of corporate venture accelerators, but I still think that's the exception. Typically, corporate, VC wants something that checks the box on proof of concept and product market fit and revenue model. And so the work is getting founders to that point, and bringing in corporate VC. Yes, corporate VC could make for a great LP, but I don't think that changes the work that needs to be done, even with their capital.
And what kind of work do you do? Because I know that Lateral Capital tries to provide the entire back office function of many startups, and this is one of the things I understand that is unique about Lateral Capital.
Well, I think let's start with the fact that, as hard as the work is of writing a check, it's still the easiest work, right? And so we do try and keep a very data-centric approach to how many deals we look at and how many investments we make. And, we've publicly said that we're trying to get to a place where we're looking at 1,000 African companies a year. And we, target to make 6 to 8 investments from that subset. But the work that starts post-investment, I think, is a lot about alignment. And I think a lot is about measuring and using data in a way that makes sense to founders as well, right? And so to give you a real example, my colleague Ochua on our team, really, all credit goes to her for building what we call our company building playbook. And it seeks to engage with founders during our diligence process and align on, okay, what is our 100-day plan after this round to get onto that growth trajectory? and how can we measure in a monthly or bi-weekly way what's working and what's not working? And those metrics should matter to a founder. It's no good that it only matters to an investor far away. Can you align how a founder wants to measure their progress with that, and then adjust along the way? And so I think that is a lot of the work. And then I think the other work is kind of future-proofing companies. So trying to identify those blind spots and be honest about them, and say the help that is needed is on hiring. There are a lot of funny memes on Twitter of VCs wanting to be helpful. Helping the train leave the station by giving it a light push. And I think a lot of those memes are sadly true, because a lot of VCs want to be helpful, but they don't really know what the work is. And so, with Achua's help on this front, I think we've created a very clear, aligned playbook for what could go wrong and what help is needed, and how do we measure whether we're going in the right way or not. And it's not for everyone. A lot of people prefer to have less of that and just sort of just go with conviction, but we found that this way works quite well.
And I should ask, what have you seen in terms of what's been the outcome of this? Has it been all VCs growing, smooth sailing, or what has been the outcome of this?
No. I was always a little bit annoyed earlier on in my career when really smart investors with gray hair said, people are the most important thing. And I'd say, well, it sounds like you're being lazy. Where's your financial model? How have you unpacked the tech stack? What's the product summary? And once you've done all those things, then we can talk about the people. But ultimately, they are right. And so those things are necessary but not sufficient. I think the important thing is to have balanced teams that cover each other's blind spots, are bold, but are also coachable and agile. And, it's a very rare thing to find that combination of founders that have something to prove. We tend to love founders that also have a chip on their shoulder, because for some reason things haven't worked out and they've adapted and kind of grown with that, but then are also willing to listen to qualified opinions in their advisors. That might not always be us, but it's someone. That rare combination of things is the most important thing. And where you think you have that but you don't is where failure tends to happen.
It's interesting that you say that, because I was having a conversation with someone and with another VC, and one of the things they said is they like founders that have been burned. And I had to ask, what do you mean founders that have been burned? And it was pretty much the same thing that you said. Someone with a chip on their shoulder. They've had experiences that were not necessarily the best, and so they're kind of like more perceptive, more what word will I use? They've experienced the good and they've experienced the bad, sort of. So you mentioned,
they have a GPS that's calibrated in a way that they will keeping on, but they will also figure out what doesn't work and adapt. And that sounds like an easy thing, but there's so many ingredients with that. It's got to do with not only competencies, but also personality and incentives and inspiration and balance. It's many, many things.
Very interesting. Very interesting. Rob, I have this question. This is more about your opinion, really. And you talked about founders being flexible and coachable, right? We hear about many African founders who are brilliant, typically, but there are challenges with relation to the ability to listen. Have you experienced such founders, and what has been your experience, and how do you deal with this?
Well, I'll start by saying that both parties need to listen. Investors need to listen too. Sure. And if both parties are listening, then they can listen for whether they are speaking the same language or if they are speaking two different languages. Because if there's two different languages, then all the listening in the world's not going to help. But I have, And I think I realized that it's important to focus on substance over form. And what I mean by that is, I had an experience with one of our founders where we were preparing for the next round, and I realized that it was difficult for an investor to understand the cash flow cycle of this business. The technology is understandable and the revenue model is understandable, but understanding the nuts and bolts of actually how does the cash flow was challenging. And so I set off down a rabbit hole, doing a lot of work on this. And I think to that founder, that was perceived as a lack of trust. Okay, why do you need to do this? Because do you not think that we have integrity as founders that, this is correct? And I realized that the way that I was asking wasn't the right way to ask. The answer was there, but it's that ability to focus on substance over form. Okay, is an apple and not an orange, rather than do you describe it as an apple or a round red fruit that grows on a tree? You've got to be flexible in how you're asking for something, but the substance still matters. I think that is very important.
Is that a culture clash thing? Because we hear that a lot. First of all, on the one hand, you're right, VCs actually need to listen. And you actually have some entrepreneurs saying that VCs don't know anything about their business. And you see that a lot. Yeah, you see that a lot. So important to listen. But again, in Africa in particular, you talk about 54, 55 countries. Does that culture clash, or how can we mitigate against some of these cultural attitudes and issues that sometimes occur when a foreign investor comes in?
Yeah, I think to create an environment of trust where listening can happen, you need to have a long-term greedy approach, both sides, right? You need to build something that is going to be valuable in the long term, very valuable. If you are sprinting for just, value in the next round or next month, then it doesn't happen. And I think then there's less tolerance for the diversity of cultural values. But I think if you're focused on something that you're both long-term greedy to build, then there is an easy way to align cultural differences. At the end of the day, if there's one thing I've learned from investing, in these very different markets, both in Africa and in Russia or Latin America or the US, it's that we are more the same than we are different in every market. And yes, there are cultural differences, but they are not that big. So I think the ability to get beyond that is essential for founders and VCs. And I think when they're long-term minded, they get there quicker. You can't make that happen with everyone. But those are the founders that we love backing, that are long-term greedy, and they tend to listen. And now I'm going to almost contradict myself. They also know who not to listen to, because they know who are qualified, and they can differentiate between a signal and noise. And that's also a very important skill set for a founder. If you listen to everyone, you will go nowhere.
True, very true. A little to the left, a little to the right will bring confusion to the center. So thanks, Rob, for that. We're going to go into another segment that we call Rapid Fire. And not to worry, you're safe. No wildfires and all. And it's just a series of random questions that, just help to, bring Rob the person out to the fore. So if you're ready, I'd like to ask about, do you like pets?
Yes, I have two.
What pets do you have? And I'd like to know what animals you have.
Sure, I have two dogs. I have two kids and I have two dogs. So I'm sort of at capacity for that, genre of a household, kids and animals. Two dogs. One is a complete, I don't even know what all the breeds are. I guess we say a mutt, with great longevity, 15 years old.
Oh, wow.
And the other is called a pointer, and so she loves chasing birds and was described to me as a Mensa student on amphetamines built like a Ferrari.
Okay, that's a nice one. A very nice one. Do you hope on keeping this equilibrium all the time? So if you add a dog, that means that there must be someone else added to the family?
I joke with my wife because we have 2 boys and both of the dogs are girls. So, if there are any additional children, I always say that the pet to child ratio is 2 extra pets. And that keeps you very focused on how big you want your family to be.
What do you do to relax?
I find that spending time with my kids is the most relaxing because they're still at an age where they haven't forgotten how to play, right? And they're coming into the world with children's eyes of fun and play. So I love that. And then secondly, I love being in nature. And so I try to get to places with a low human per square distance measurement, whether that's out in the mountains or in the ocean or wherever. So nature and playing with my kids.
So I'm guessing you like hiking then?
Sure. Really anything outside of the concrete.
What are your favorite hiking spots anywhere in the world?
Yeah, some of my favorite hiking spots are actually in South Africa.
Okay.
There's just such an amazing proximity to beautiful hiking spots. In the Cedarburg, in the Cape, in the Drakensberg, in Natal. There's diversity. South Africa really is many lands in one country, and so those are my favorite hiking spots. I would say the Drakensberg hike is number 1.
Okay, that sounds good. And since you sound like an outdoors person, what sports do you like?
Surfing is one that I love. I've still somehow never made it to Takwa Bay outside Lagos, but I promised when COVID is done to spend some time in Eloff and go surfing in Takwa Bay, which I'm really excited about. But that's my favorite.
That sounds good. And what's your favorite book and why?
I can say with absolute confidence that I don't have a favorite book. I think it's important to just keep reading as many things as possible. I abide by Naval Ravikant's view on read anything and everything, and if you need to read books together. And I've really benefited from sort of co-reading books that are very different. But the book I'm reading now is probably one of my favorites. Yeah, definitely now and maybe ever, which is James Lovelock, the British scientist, just wrote a book called Novacine, which is about the next phase of human existence as a species and coexisting with machines and how that ties into climate change. So it's quite futuristic, but based in science.
What's the name of the book again?
It's called Novacine.
Oh, Novacine, okay.
And so it's the new period, there's the Pleistocene period and the scene. So Novacine is sort of the age that we're going into potentially, according to James Lovelock, and I think that's very interesting.
That sounds interesting. What do you see yourself doing 10 years from now?
Hopefully having the advice of the founders that I've invested in now to continue to work with the next generation of talented founders. So I think it would be a dream to have some of the most successful founders we work with to, maybe join us and continue to build that way for the next cohort.
Excellent. To close, what advice would you have for entrepreneurs on the continent?
Right. Yeah. We kind of, I think, grin internally at the saying. So many people's decks say African proverb: if you want to go fast, go alone. If you want to go far, go together. But it really is true that this is a very lonely journey to do alone. And some of the best founders have this conviction that they can do everything alone. I think the most valuable thing for me was finding a partner that, helps me see through a lot of my blind spots. So I think one is find the right person to build what you want to build with you. And then number 2 is be honest with yourself and make it measurable. All the conviction in the world cannot refute the facts. And so if you're building in a way that you can measure success and failure in a very real way, your prospects for success are so much higher.
Thank you so much, Rob. And with that, we've come to this particular edition of GFA-Attract. Thanks to Rob for his wisdom and for the comments and thoughts. everyone that has listened to this is definitely going to sit back and actually think. So thank you everyone for watching, and we look forward to the next edition of GFA-Attract.